U.S. in Hong Kong. Thank you so much for that. We'll continue discussing DBS, which has beaten expectations for the second quarter, reporting a 20% jump in profit. The strong results for Singapore's largest lender may bode well for smaller rivals who follow suit later this week. Let's cross to Singapore now, and Bloomberg Intelligence banking analyst Diksha Gera joins us now. Diksha, so what drove the numbers?
Yeah, hi, very good morning, everyone. So I think it's a pretty solid set of numbers, 20% profit growth, and it's broad-based. So you saw 3 basis points margin expansion sequentially, 6 basis points year on year. That's pretty impressive. Loan growth tapered a little bit to 3.7%, but the cost focus and keeping the asset quality stable, and of course the treasury markets and markets-related income really worked well for DBS. So yes, I think it's a pretty solid set of numbers, especially given the macro headwinds that Singapore's been facing.
Yeah, considering that, heading into this week, there was a feeling that DBS might be the only Singaporean bank that would post a profit. But does this change the picture for OCBC and UOB, who are going to report later in the week?
Yeah, I think consensus, I read a news piece mentioning that people expect the other two banks to kind of lag behind. I think that may not be the case. UOB as well should report pretty solid second quarter. Not that it means much for the second half, but I think second quarter numbers should be pretty strong. If you look at the margins for most of these banks, like SIBOR, which is the interbank rate, has been rising upwards. And Singapore Bank's sensitivity to interest margins is pretty high. So that should help UOB as well to kind of do some margin gains. And secondly, I think the property sector kind of led quite a fair bit of loan growth in the second quarter as well. So the banks might see some benefits emerging from that too. So margins, treasury and property sector, those will drive earnings for the other two as well.
All right, but you're talking about the big picture in Singapore earlier. There's been that 17% slump in exports for Singapore in June. Are the banks going to be able to keep going at this pace?
Yeah, of course, banks are a reflection on the economy itself, so which is why we think this is possibly as, the second half kind of starts to look a little bit worrisome. Loan growth, if you see, has been tapering off across the board. The little green shoots you saw from the property sector may not continue because of the cooling measures. And also, SIBOR has been inching up, but we don't think it can go on much further because the spread between SIBOR and LIBOR has been coming off. So yes, there are headwinds coming up, and of course, Singapore is a very exposed economy, so the second quarter numbers definitely don't reflect what we expect for the second half.
Exactly. Given, as you mentioned, the trade tensions looming on Singapore, such an exposed economy, could this be as good as it gets for the year?
Yeah, I think it pretty much, this could be the best that they will see for the year, but I would still like to point out that they could hold on here. It doesn't mean that it's all doom and gloom, because if you look at the ability of Singapore banks to find different revenue drivers, they could still see a single-digit profit growth. The wealth management business is really doing well, and anecdotally, money is flying from Hong Kong to Singapore, so that is another driver. And secondly, I think by the time the rate cut impact starts to show in their margins, the year will be over. So I think this year they could still manage to squeeze in margin increases for the Sing banks.
All right, Bloomberg Intelligence banking analyst Diksha Gera in Singapore. Thanks for joining us. Well, still to come, the BOJ